Thank you for coming. Okay, you guys, why don't we get started? You were all on time. Really appreciate that. I'm Jeff Plimpton with OptionVue Systems. We're going to be talking about having fun with volatility trading. And I don't know, in my opinion, the real fun here is that you don't have to do a lot of trading. That's probably the nicest aspect of it. Let me see if I can scroll this a little bit here. I know you guys have seen this many times before, but I just want to go over the disclaimer. This is for educational purposes only. I'm not saying you need to trade this way. This is not going to be about options trading today, which is usually what we talk about around here and probably what you guys are used to talking about. Let me get rid of this here. We're not quite ready for the software yet. Okay. I'm going to kind of do this a little backwards, and why I'm talking about this. I bet some of you, I don't know your ages or anything, but some of you might have heard the old Woody Allen saying, those who can't do teach, and those who can't teach, teach Jim. Well, I want you guys to know I am in this, and I really was amazed. I came back here to OptionVue a little over a year ago, and I hadn't thought of volatility trading. Been trading options for about 15 years, and hadn't given it any thought till Len Yates put it in front of me. So I'm going to show you the recent results we have right now, before we even start in on this thing. And we're up almost 80%. And I'll give you a second or two to see what the max drawdown was. And because it's trading volatility, these are Barclays Volatility Exchange Traded Notes. They do move around a lot, but it's remarkable the returns on this, considering the number of trades you'll do in a year. And I will show you that a little bit later on the OptionVue software, actually. So let's start in. We're going to talk about VXX Trading. Some of you have heard us talk about this before. I just showed you our recent performance, and I want to keep this to around half an hour. So I'm not going to spend a lot of time on these slides that talk about performance. But our records go back to 2012, and you know what, I'll make a statement about this pretty quick because you guys can see that that's from 2012 to 14. That's quite an up move. But let's just go past these. You can see for 4 years up 102%. That's pretty good. You know, though similar to options trading, we had to come up with a trading plan. And we've been working on that for a while. Initially, we're long XIV. When we reach a certain point on our indicator, we're in cash. And then another point on the indicator down here, which has a number assigned to it, we're going to be long VXX. Okay? These were the original indicators. 1.2 was on the indicator, and you don't have to know what these numbers represent, but Len had them calculated. Couple comments, like why did we get into this? How did Len discover this? Back in February 2012, Larry McMillan wrote about a system trading the VXX and XIV, and it seemed remarkably simple. So that's why Len got into it and started working on it. It increased tenfold across 5.5 years. And the basics of it are they're exchange traded notes on the VXX and XIV. Those are derived from trading the front 2 months of the VX futures, which are constantly fluctuating between the front month and the back month. I'm not going to go into a great amount of detail here, but I do want you to have a little bit of feel for how this works. Intraday, XIV and VXX are mirror images of each other. Jim Graham reminded me of this, that it's only within the day. But you'll see that on the graph regardless, so we'll look at that a little bit later. These are useful VXX when you're shorting. You're not allowed to short stocks, you could short the VXX, and when you're long, you simply buy the XIV to short the VXX. So it's very simple. It's just like trading stocks. It's very simple. And I'm going to go past this 1.2 indicator because I want to show you how the trading plan has evolved. So you see it says system revisions here. We came up with a new indicator and new parameters. The Yates Volatility Indicator. The VX diff is movements from the front month on the VX futures to the back month on the VX futures. And these are the new guidelines. When we get into the software, you'll see these lines very clearly. And he just came up with another addition to the indicator called the danger indicator because during the Brexit, I'm going to include myself in this. Him and I both stayed in XIV during the Brexit, and a danger indicator seemed called for. Although I'm also going to show you that even without it, there were a couple of indications that we should have gone to cash. I'll show you that in a little bit. But this is basically the indicator, and we'll take a look at it on the software. Again, I'm not going to take time here going over the front and rear contracts for the VX diff. That will show up on your software. Again, VXX, exchange traded note representing a standard 30-day VIX futures price. We kind of touched on that already. Here, roll yield. Now this is pretty important, rolling between the the front two contracts. When a normal term structure exists, the roll yield is negative, as the fund must buy futures at a higher price, the second month contracts, than the ones it's selling in the nearby. So roll yield you'll also see on your OptionVue screen, and it's something you can use to see which way we're leaning here towards XIV or VXX. You know what? I think I'm going to go to the software. So here it talks about inverse XIV is shorting the VXX. That's what I meant by these indicators are on your screen. Daily roll effect, fair value. These are all going to be in the software. And whether we provided information about when to make a trade or not, you guys could figure it out very easily. And I think that if you're in XIV, VX negative, you're in VXX. I think I'm going to go ahead and get into the software. We're in XIV right now, so let me bring this up. I think most of you guys have the software, so I'm just going to go over how to bring up this indicator. These little price tags right here, this is the Yates indicator down at the bottom. You notice this threshold are those lines that I was talking about for whether to be in XIV, to be in cash, or to move to the VXX. I'm going to click OK, click the next button to the left, and up comes the indicator. So this is the Yates Volatility Indicator, and when we're above, I don't know how well you guys can see it, but when we're above this green line, this is that 0.83 line we're in XIV. Pretty simple, right? Here, back in 2015, when it hit the green line, we'll talk about this danger indicator in a minute, we would go to cash. This increases our profitability, and Jim Graham did a test, I think a 7-year test on this, to prove that being in cash part of the time, rather than just vacillating between XIV and VXX, being in cash part of the time actually increases our profits. So you can see it really tumbled here, and when it hit the 0.63 here, we wanted to be in the VXX. And actually we would be in it for a while. You can see it doesn't happen that often across time here. And then when it hit the 0.63 again, back to cash. And you can see it didn't break into the positive for quite a while, a couple months. Broke down again, back into VXX, broke up, and when it broke this line here, back into XIV. So that's across all this time, maybe across a year. You had to do a little bit of trading, but not much. Certainly not compared to adjusting a butterfly or a condor. So those are the trading rules. We're going to stay above this 0.83, which you can see that can go for a very long time. Dips down, we have to sell XIV again, be in cash, rolls back up, get back into XIV. Now, YVD, Yates Volatility Danger Indicator, what is that? Again, that happened right in here with this Brexit. Again, I don't know, and I'll just talk about myself, my own arrogance. I really didn't think Britain would leave the EU. Huge mistake. But the warning is here now with this danger indicator. When these lines break 1.0, these pink lines, you better be on your toes and be aware that maybe you should get into cash and get out of, in this case, out of XIV. It happened right in here, and I want to point out, because I did notice it, these pink lines weren't here when Brexit happened. It bounced off this line. You can't see it real well, but it's right here. It bounced off the green line a couple times before the Brexit announcement, and you can see what happened here. And it just tanked. And as I'm confessing to you, I did not get out. I stayed in. It actually worked out just fine, though. You can see, because this is a fundamental situation, it bounced back and things ended up being fine. But with this danger indicator, this should really help our trading plan. Again, I don't know if you can see it very well. The other day, we had a down day a couple days ago, and there was a little pink spot that opened, and I was kind of keeping my eye open this time. I wasn't going to, hopefully, not make the same mistake twice. So if we look back over time, big fundamental event right here. Pink lines popped up above the 1.0 mark to warn us. Are there any other times historically, recently, where this would have helped us? Not here, because we would be in cash right here. But you can see the line does pop up, but it doesn't matter because we're in cash. Here's a huge one. This would have helped us. We're heading into this event. But again, see, you can see it hit the green line twice. If we just follow our rules, like all trading, we would be fine. But woulda, coulda, shoulda, right? Hits the green line twice. Some of us might stay in, thinking, well, maybe we'll get a pop-up now. It didn't. It just tanked. And when it hit the brown line here, we need to get into the VXX. which we were in for quite a while. So this is going to be in addition to the trading plan. Let's see if this, just real quick, let's see if there's any other points where the pink line would have helped. Here's kind of an obvious one. We're in XIV, not in cash, and the line just hit the 1. This would have been a little close possibly for us to get out and get into cash. It was most obvious right here, but see, we would already be in cash. Any other just real obvious ones? These others, it seems like we're already in cash. But I really do think, at least for me, I guess I need a slap in the face once in a while, this Yates volatility danger signal will help me follow the trading plan, hopefully with a bit more discipline. I really think this is an amazing system. You kind of have to jump in and get a feel for it to see how well it's been doing for everybody. But those of us doing it in the office, it's just been wonderful. Today was a good example. 500 shares up about $500, just fantastic. And as you can see, a lot easier than managing some of our options trades, right? I think the hope when many of us got into options was that maybe we could put on a condor and, you know, just let it wave up and down in between the short call and the short put. But that's not always the case. I think we find that out pretty quick. You have to manage these positions. And with this, you still have to manage, you still have to trade, but the indicator is very clear, it's very manageable, and the returns are really fantastic. Can you use a pointer? Oh, sorry, I guess. Can you see, you guys can't see my cursor moving around? Are you pointing to anything as you're, yeah, I am. Oh, you guys can't see that. I'm so sorry. I haven't pulled out the, no. Oh, I'm so sorry. I thought you guys could see my, my pointer moving around. That does make a difference. I don't know if Jim's listening. I need to pull out the pointer then. Maybe he'll come over. Jerry Gamble. No. They want me to use the pointer. They can't see me. Hold on just a second, you guys. You guys can see the blue line, can you, when I click on it like that? Does the blue line show up at least? Okay, so you guys can see the blue line. You know what, I'll just use that. We're on quick webinar now, not WebEx, so it's a little different. We're trying to figure it out. That's okay, just let me use the blue line, thanks. You guys can see the blue line, right? So I'm going to kind of go back here real quick. This is the Brexit event. Here, I'm sorry, no it's not. Let me go back here. This is the Brexit event. And what I'm talking about is right here. Okay, now you see the pointer. Okay, well good. It's pretty important that you guys kind of get an idea of this danger indicator. The green line, I actually saw it and knew what to do, and I didn't make a move. I didn't get out. I should have been in cash. So this is pretty important that you pay attention to these red lines. The event I'm talking about, yes, about 2 days ago is right here. I'll just kind of go around it because it's just a dot. You might not even be able to see it. Now I can see the pointer. Okay, it's right around here. The lines are clear enough, but Basically, it hits the line, get into cash, hits the line for 0.63, get into VXX, stays above. You don't do anything. Very simple. Nice way to trade. Really big returns, at least for me so far, even though I've made a couple mistakes. Now you can't, the pointer's on the screen, but it's no longer moving. Okay, so I have to, can you see it now? I'll keep it moving. Let me move down here. Oh man, will the pointer disappear? Well, I'll at least make the blue line appear. There weren't that many events where you have to make a move. These red lines appear, these pink lines appear, but if we're in cash, we're not going to do anything. All through here, we're not going to do anything. We're just going to stay in cash till it breaks over the 0.83 line or breaks below the 0.63 line. I see it. The pointer freezes, huh? Okay. Well, that being said, is what I'm saying making sense? Really pretty simple compared to what you guys are used to. The pointer's not going to be moving now. I'm not touching it. Can you see the graph well enough to see the green hash lines here and the red hash lines? We're following the trade on the blue line. And for long periods of time, on this one, from here to here, we're just in XIV. We're not trading. We don't have to do anything. That's what I love. I got other stuff to do. When I'm in multiple options trades, I got to keep an eye on them. Here to here, XIV. Here to here, VXX. From this point to this point, we're in cash. Pretty logical, right? I mean, we have a couple videos on this, and this one will be posted. You guys can go back over this. But I just find it amazing how easy it is, how little small chance of you screwing it up. And I don't mean you personally, I mean me or anybody screwing it up. Very easy to follow. So with that in mind, I want to leave you with that thought, and maybe you guys can check it out at OptionVue.com. Click on the Trading tab. This video will be posted, and there's a couple other videos on there with Len Yates. I think it's pretty easy to follow, but you know, I'm where I'm at, and you guys are sitting where you're at. I'm going to cut it off here, but I just want to thank you so much for coming. I always appreciate it if some of you guys are willing to show up. Okay? Thank you very much, and everybody have a great day, okay? Thanks, Jerry. Thanks, David, Josh, everybody. Take care. Bye.